Good evening, everybody. Welcome back to another hour of the coffee hour. All right. Hopefully we'll be able to get through this stream. There was a lot that came out. We had a lot of earnings yesterday. Definitely, I'm going to be covering just them at a very high level. I had about 1 hour to prep for this stream, going through my news sources, and maybe next time I probably need to wake up a little more earlier, especially when it comes to these earnings reports. So we're going to be talking about ASML because I want to cover just a little bit about what they have to say, because they would be a good indicator on where the rest of the market, at least for semiconductors, is going. So it's a good kind of just indicator to see how they're doing. So we're going to take a look at what they did or how they did for the quarter. We're going to be talking about Meta, Tesla, Microsoft, because they just had earnings. We'll be talking a little bit about gold. All right. Gold is also in the news, of course. And we'll kind of mix it up. All right. We might have some news about NVIDIA, SK Hynix, and some NEOS ETFs, some high yield ETFs that will be dropping soon. So I am just kind of, putting all the news that I get right here on the screen. I'm just, going to go through it all as fast as possible. I don't want to bore the audience. I definitely want to be respectful of your guys' time. And then towards the end, all right, if we could finish up quick enough, I'll open up the line. So, guests can come on. They could tell us, kind of what they're doing, if they want to talk about anything, relevant to what today's show covered. All right. Or if they want to just share their thoughts. I'm always interested in hearing other investor thoughts. It's always fun. It's interactive, and, don't be shy. All right. Don't be shy. I don't bite. Anyways, guys, let's get into it because we got a lot to go. All right. So, we have, let's see. We have Victor Sank. Hey, welcome. All right. Can you guys hear me? Can I get a quick sound check? Because I just want to make sure. We had some sound issues yesterday. So I just want to make sure we're good here. So if anyone can let me know. All right. Agreed, says the working investor. Hey, welcome. Welcome to the show. All right. And we have Skeptic in the house. All right. Always putting in those austere, weird ETFs. All right. Let's see what else we got. So we had like ad carry. Did you invest in computer memory stocks? I did not. All right. I know there's the big three out there. We have, we covered it on the stream before. You have Micron, you have SK Hynix, and you also have Samsung. But I have personally not invested in any of them. I kind of want to, but I just don't want to buy at the top. Right. I mean, even though the demand is crazy right now for computer memory, I still don't want to just buy at the top just to get that exposure, right? I have this luck wherever I buy things, things usually dip after the fact. So maybe someone else with that luck will buy it first, and then it'll dip, and then I could buy in, right? And then it'll dip even further, and then you guys can get in. So, all right, cool. So hell yeah, we live. Working investor. I hope you guys can see it. Let's see. Sound is up. Appreciate that from the working investor. And we have Carl. Hey, what's up, man? Welcome to the show. All right, guys. For any of the audience on X, all right, I apologize. I can't post anything to X during the stream. But what I will try to do is I can see comments on X. So if you're on X, feel free to drop in a comment if you'd like. All right, guys. I've been blabbering on enough. Let's get into the sauce. All right. Whoa, you guys can't see anything. There we go. All right. So as always, welcome back. Appreciate you guys joining me for this coffee hour. I'm just going to basically go over kind of the news, what's happening in the broader stock market. All right. So let's get into this. All right. We have Real Evil Duck here saying meow, which is weird because he's a duck. So, all right, let's get into this. All right, so the S&P 500, guys, down just slightly for the day, okay? This is probably due to the Federal Reserve, cutting the rates, or not cutting the rates, excuse me, holding steady. I didn't see anything negative, though. I really seen no negative news from that. And unlike prior instances where the Federal Reserve, had their commentary and they had their basically their conference, or their whatever you want to call it, right? Where Jerome Powell speaks, usually the market would act extremely erratic. Maybe we'll see that tomorrow, right? As the market digests this news. But I didn't see anything super negative about what he had said. As a matter of fact, we're going to cover some of it. If anything, it looks good. He actually said, I'm paraphrasing, but that a rate hike is definitely not anyone's base case right now. So that is really, really good. So even if we keep rates steady, that is good because there's only one way, forward, and that's either a rate cut in the future or at least, base rate, keep it where it's at. So S&P 500 didn't really do anything so far, 92 basis points up year to date, 1.74, not all that exciting. Gold had a crazy rip today. All right, 3.88% on the day. And year to date, it is still the best performing asset. Okay, 24.17% to the upside. Gold is just going crazy. And right now, there was some news about the Asia markets basically sending gold higher. Actually, here in Thailand, there's news going around that gold shops, and I never stopped to think about this, but gold shops actually have to start closing their doors because they can't sell gold, right? They can't sell any gold. Nobody's buying gold. Nobody's buying jewelry because it's so expensive. So that is, kind of an effect of rising gold prices, is that jewelry obviously becomes more expensive. So some jewelry shops here will probably, have to shut their doors for a little while until gold comes down a bit. But here's also the other thing about this. That might have a potential effect just for the jewelry market, right? So that will be interesting to see as time goes on. Silver just been absolutely crazy. I don't know if you guys have, been keeping an eye on silver, but it's just been really weird. Like it is acting extremely volatile, still going up, still climbing to the top. Year to date, we're up 60% on silver. All right, 60%, absolutely insane. Bitcoin not doing a damn thing. We're still below 90,000. All right, we reached that all-time high. Well, not all-time high, excuse me. We reached 95K not too long ago, 96K, and we just been in this slump, right? We just been in this slump. Year to date, not doing that hot, right? 1.77%. All right, so I see retire on dividends. Hey, brother. Hey, welcome. All right. I do sleep, actually. I didn't get enough sleep today, right? And now I'm doing this stream. I had about an hour to prepare for the stream. So this will be a lot of ad hoc-ish, type of commentary. So excuse me if I hit you guys with the ums and the ers and the like I am trying to, get enough content in me so I can commit it to memory and then rehearse it, with you guys, because all of this, of course, is unscripted. But I appreciate you joining me. All right. Skeptic. He runs out degeneracy and coffee. That is 100% true. And Alti keeps me up at night. Absolutely. She is a harsh mistress. All right. Harsh mistress. All right. So anyways, let's move on to our first big piece of news. And that is about NEOS. All right. NEOS, if you guys are a high yield dividend investor, then this might be of interest to you. All right. This news just dropped. So appreciate Skeptic for dropping this into the Discord. But we see that they're coming out with 3 new funds. All right. Those 3 new funds is XSPY, XQQQI, and XBCI. All right. That's going to be for the 500, the S&P 500, the QQQ, and for basically BTCI. So what's interesting, right? What's interesting about these is they're following kind of the same thing that Tap Alpha is doing. They're going to be doing kind of a similar strategy where they're employing some type of leverage. So let's take a look. So this is exactly what they're going to be doing, right? So they're going to have 100%. 150% exposure via options, synthetic longs plus cover calls, no margin leverage. All right, higher income, higher volatility, which is absolutely true whenever you have that much exposure, right? So this is definitely more than the Tap Alpha stuff, which has 130%. Definitely more than the Roundhill stuff, which has 120%. So the people who are getting really excited for this stuff, just remember that volatility cuts both ways, okay? Leverage cuts both ways, all right? This 150% up is nice. 150% down is not as nice, okay? So just keep that in mind. Of course, there's a lot of people out there now who are saying like Roundhill is garbage, Roundhill is trash, the weekly pays are trash. Well, yeah, that tends to happen when we are, basically going down on a lot of the underliers. I mean, Palantir has not even recovered. As a matter of fact, Palantir has continued to go down. NVIDIA has kind of just remained flat. But you have, some of the biggest losers like Coinbase, EOIW, and MSTW for MSTR. They have just been atrocious. So again, when you stack on that 120% leverage, it's just an increased volatility to the downside. So just remember, even though these will have the S&P 500 as an underlier, well, really it's their products, you know, the QQQI, SPY-I, BTCI, even though it'll have those as their underliers, just remember that those, you know, do have capped upside. They are prone to capturing full downside, right? Because of the underliers, right? S&P 500, Bitcoin, QQQ. So this will just have that stacked on top of that, right? In any which way, any which direction. So NEOS is great. Okay. NEOS, whatever you want to call it, tomato. They are a great fund, right? They're a great fund, responsible fund managers. A lot of happy customers have been talking about NEOS. But just remember that this, you know, again, this is a real thing. All right. This leverage, this exposure, this 150% exposure is a real thing. All right. So, of course, we might start seeing a slew of videos with these coming out. And then, you know, if something bad happens, the market takes a massive dip, we'll probably start to see people say that these funds suck. All right. Okay. Moving on. Another big news. Robinhood came out. And again, shout out to you, Skeptic, for dropping this in there. So this is Robinhood Concierge, right? They have they came out with a new feature, and of course you got to have some bucks in that brokerage account, right? You can't just be showing up with $1,000 and expecting concierge service. All right, but this is they're now offering tax and legacy services. I just want you to know, to do an estate, right? To do your estate planning, easy minimum $15,000, right? Sometimes I've seen places do it for $10,000, some as high as or as low as like $7,500. Okay, it's very expensive. And tax, all right, tax prep. They're going to do your taxes for you, which is also really, really cool. I mean, that could, you know, save you a couple bucks. You know, depending on where you're going, H&R Block, or if you do it yourself, TurboTax, or if you use, you know, your own CPA. Although I don't know, and I'm not pumping them up. All right, I'm not sponsored by Robinhood. I don't know what their, you know, tax service is going to be like. But again, this is interesting because for Robinhood, especially for those who own Robinhood common stock, you know, this is interesting because this is Robinhood becoming the all-in-one financial services hub, right? This is the financial services platform. It has banks now, banking, it has credit cards, it has your brokerage there. You can get a mortgage through Robinhood, and now they have tax and legacy services. This is absolutely astounding. This is definitely bullish for Robinhood. I think I think the market will definitely like this. Of course, again, you need to have that $1 million plus worth or in assets on Robinhood, right? So they'll do your tax filing, they'll help you with legacy planning, and you know, they give you personalized guidance, which is again really, really cool. You can request access. They give you some, you know, FAQs down here, right? So definitely check that out if you're one of those people. And I believe they are doing an offer where right here you get a 1% match on qualifying transfers. Okay, so again, this is Robinhood's playbook. They always offer matches for anything, whether it's crypto, transferring crypto into the brokerage, transferring your stocks, moving just things into Robinhood. They always usually give you a nice match. And this would be really good, especially if you're, you know, moving about $1 million or 500,000, right? So really, really cool stuff there. Excuse me, guys. 1 second. I got to have a cup of coffee. I got to stop smoking cigars. Okay. So now we have from bull theory. I was looking for a video that kind of, you know, summarized what was going on with you know, the Federal Reserve and kind of what they spoke about, or at least an article. I couldn't find one that I liked. And again, I only had about an hour to prep for this, so I couldn't commit everything to memory. But I found this on X from Bull Theory, so I just wanted to share this with you guys. I think he summarizes it pretty well. Fed Powell just confirmed that the rate hikes are off the table, which we kind of already knew. The Fed held rates steady, all right, 3.5% to 3.75%. The vote was 10-2, meaning that their two members wanted to cut. And, you know, that was the biggest story there, was that there was two dissenters. One of them was Myron, which I believe his term is coming due this Saturday, but, you know, they can keep him there. You know, he came into the picture, you know, from the Trump administration. The Trump administration put him there after, I believe, I want to say it was maybe it was Lisa Cook, or maybe it was someone else that had resigned. I can't remember. It's been a while. So Powell clearly said a rate hike is not anyone's base case. All right. Very important. So we can take a rate hike off the table. All right, that is just one thing we have to worry less about, especially if you're investing in the stock market. That is the Fed openly saying tightening is finished. Okay, so quantitative tightening, quantitative easing. They stopped quantitative tightening officially back in December. I believe it was December 1st or 4th, if I'm not mistaken. But they didn't officially mention that they're moving into a quantitative easing cycle, right? They didn't mention that at all. There's this theory out there, this narrative out there that we're already in this phase of soft quantitative easing, right? Although it's not officially announced, but we're in this soft quantitative easing where, the Fed is starting to buy a bunch of stuff. So we'll see how that continues to go. Again, when we enter into this quantitative easing cycle, that means there's going to be more liquidity, right? It's not just the interest rate making it cheaper on the debt markets. It's also the Fed just printing a bunch of cash, as we just saw. Like I keep saying, we have going through the House right now a bill to increase DHS, Department of Homeland Security, another $1.5 trillion. I mean, that money's got to come from somewhere, right? And the Feds are probably just going to keep printing that. And beyond that, or before that, last year we had the OBBB, the one big beautiful bill, get passed, and that added $3 trillion. And then probably a month ago now, we also had the Trump administration talking about increasing the defense spending from $1 trillion to $1.5 trillion. So again, let's just keep printing that money, guys. All right. Nothing stops this train, as Lynn Alden always says. Okay. So we're just going to keep increasing the debt, keep printing money. And this is good tailwinds for real assets. Okay. Real assets like gold. Okay. Real assets like there's MLPs out there. We covered MLPs before, but there's also energy, infrastructure, power, those kind of things. There's even airports, right? There's ETFs that actually hold airports. But these are real assets that people can look into. Okay, so the direction is no longer should we hike more? It's now how long do we hold before we cut? Again, I really think that once we get this new Fed in, that it doesn't matter who it is. I strongly believe we'll probably get that cut at that point or whenever. And again, you have to think like it's not going to be a quick thing. Like when Jerome Powell gets the boot and he leaves his position. It's going to be a couple of hearings. It's probably going to be a couple of weeks, if not a couple of months, in order to confirm a new Fed chair. All right. So you still have that coming on. All right. So that's going to, just prolong when we could potentially see a cut. Now, will we see a cut between now and when Jerome Powell leaves? I personally don't think so, but you never know, right? Inflation is still elevated, but most of the excess inflation is coming from tariffs and not real demand. Core PCE, excluding tariff effects, is running only slightly above 2%. All right. Powell said tariff-driven inflation should peak by mid-2026 and then come down later this year, which will give the Fed room to loosen policy. All right. This is the big one. The Fed needs room to loosen the policy, i.e. drop the rates. All right. Jobs growth. Powell said the economy is once again surprised with strength. Again, really, really good. Unemployment is showing signs of stabilization. They've stabilized the unemployment. Future policy decisions will be made meeting by meeting like they've always been doing. No decisions have been made about future cuts. Let's see on the dollar. Powell explicitly said that the Fed does not comment on the dollar. He also said that there's not much evidence that foreign investors are aggressively hedging out of dollar assets. And we'll cover this because there was a quick clip of Scott Besson talking about the dollar, and I definitely want to share that with you guys. I thought it was really interesting. All right. On the U.S. deficit, which we just talked about, Powell said that the U.S. budget deficit is unsustainable, which we know. All right. We're already at $38 trillion in debt. Maybe let's add another trillion on there. Why not? Let's get it to an even number of 40 trillion. All right. That is the direction that we're heading in. All right. So this is good, right? This is well, when I say good, this is just more of a case to have, a real asset in your portfolio, something like a gold. Okay, which we're going to be talking about here in just a moment. All right, on independence in the Fed or politics, Powell said that the Fed has not lost independence, which is a big thing. Again, nobody wants a shadow Fed. He does not believe it will lose independence. All right, on tariffs, we kind of already covered that. Rate cuts, let's see what else. Government shutdown. Powell said any effects from the shutdown should be reversed this quarter. Now we have another government shutdown that's potentially happening this weekend. So something to keep an eye on. Again, in the past, wasn't a big deal. The market still continued to climb higher. But again, things started happening after the fact, right? Things started happening later in October. So I think the government shutdown definitely had an impact on the stock market, although it was not immediately felt. All right, so continuing on. So when you put everything together, the message is very clear. The Fed is done hiking. Inflation pressure is fading. Tariffs are the main remaining risk. Now, with the inflation pressure fading, I showed yesterday Trueflation. If you guys haven't checked that out, you can sign up for free. But Trueflation is a website where it shows active real numbers, right? They use real numbers to come to their actual CPI versus the government numbers that are produced by the BLS. So true inflation is pretty neat. I like how they kind of do it. They use 1,000 inputs, right? They're actually browsing websites live, getting prices and things like that. So it's really cool how they come to that number. But that's it, right? The biggest news, tightening cycle is over. We're not getting a rate hike, all right? And we'll just keep on keeping on. So that is all coming from Bull Theory on X. So appreciate that Bull Theory. All right, let's move on to the news about the dollar. Okay, so this is Treasury Secretary Scott Bessent talking about absolutely not the U.S. government absolutely not intervening in the currency market. So let's listen in.
In America, I mean, one question people have right now is the appeal of U.S. assets, especially when they look at the U.S. dollar, which is trading at multi-year lows. I know the president sort of endorsed this as a good thing yesterday, but is it really a good thing if people are wondering if the dollar is the right place to be?
Well, again, U.S. always has a strong dollar policy, but a strong dollar policy means setting the right fundamentals. And I think that with President Trump, with the One Big Beautiful Bill, with our regulatory policies, we are making this the best place to come, build your business, have tax certainty, regulatory certainty, energy certainty, and over time, the prices on the screen can fluctuate over 6 months, a year.
You don't worry about dramatic weakness in the dollar?
That, again, if we have sound policies, the money will flow in. And we are bringing down our trade deficits. So automatically, that should lead to more dollar strength over time.
Are we intervening in the currency market right now, strengthening the yen? Is that happening?
Absolutely not.
Is that something you're planning to do? There was word that the New York Fed was looking for prices.
Again, we don't comment other than to say we have a strong dollar policy. And again, I think President Trump has the past year, 2025 was about setting the table. And now I think we're going to have a very strong economy this year. The Democrats don't shut down the government. The Atlanta Fed GDP now number is 5.4%. When was the last time we saw that?
It's a high growth number. And one of the questions is, can we get that kind of growth without sparking inflation?
I think we can, because what causes inflation is supply constraint. And with the deregulatory agenda that we have, we are creating supply, whether it's in financial lending, whether it's in energy, we're increasing manufacturing. So again, what led to the great inflation was the Democrats caused a demand shock with government spending, but they caused a supply constraint with all the overregulation. We're doing the opposite. We got a private sector boom, and we are taking out dozens of regulations for every new regulation that goes in.
But there will be stimulus this year as a result of the big beautiful bill, the tax refunds that are set to hit the economy. I guess the question is, can we avoid inflation in that scenario? We're already starting to see it in wages.
Sorry?
We're already starting to see wages climb.
But we're also seeing substantial productivity. So productivity and wage growth does not lead to inflation. And there's measured inflation and observable inflation. Measured inflation is with a lag. So we can see that rents are substantially down. It's different than the measurement. So the observable inflation, some of the more online or quick sampling inflation numbers are substantially below 2% already.
So what do you guys think, right? What do you guys think? Interested in your thoughts on this. Some of the key takeaways that I got from this, and this, I do agree with Treasury Secretary Scott Bessent here. This current administration has been deregulating a lot of stuff, right? Especially when it comes to kind the big themes right now. They're pushing hard, right? They're pushing hard for power, to create power. They listen to a lot of business leaders in the space. You know, you had Sam Altman, Lisa Su, Jensen Huang. You had Microsoft in there in the mix. They're listening to these people, and they're all saying the same thing, that we need a lot of power. So they're deregulating it. They're incentivizing states to, you know, basically increase power production or build power plants. And also in the credit market, right? The debt markets. Scott Bessent said this last year. He said that the amount of inflows to these private credit funds, that was a signal, that was an indicator that regulation was too tight, right? Too tight on the banks. And now there was an article, I don't have it with me, but there was an article out that basically was saying that, you know, regulation on banks is loosening, right? But we've seen what happened the last time that regulation was extremely loose, right? We had the Silicon Valley Bank basically blow up, right? If you guys remember that. But that is something, again, that's with the whole deregulation piece. And then of course we have AI, right? When the OBBB was getting passed, there was a little line in there that was basically saying that the states could not touch anything related to AI. They cannot create some, you know, arbitrary law. But then that bill got kicked back, and, you know, they had to take that language out. Then they passed the OBBB, and then not too long after that, Trump came out with an executive order, basically giving a framework for AI companies to work on, you know, across the USA. So again, when it comes to deregulation, I'm in agreement with that. And, you know, that I don't know if that's a good thing for businesses or not. It seems to be, right? The market has been reacting very positively to it. And you have these companies that are, you know, posting some really crazy earnings. All right. So tell me what you guys think. You know, is more regulation good? You know, is less better? You know, what do you guys think? What do you guys think? I like to think that, you know, less regulation is good for business. It allows the businesses to innovate. Of course, I'm not a fan, though. Don't get me wrong. I'm not a fan of the U.S. government picking winners and losers and taking stakes in companies. I mean, that's basically nationalization, right? That's what, China and Russia do, right? They have state-sponsored companies, nationalized companies. I'm not a fan of that. Is that what we're seeing in the United States? Not really. You know, they're only taking these small 10% stakes. But again, in a free capitalist market, you have to let the good companies win and the bad companies die off. Like, that's what's supposed to happen, or else we're going to have like a new 2008, 2009 GFC where, you know, they're too big to fail. If you guys remember that, or if you guys have heard that before, right? Too big to fail. The government intervention came in, saved a bunch of banks at the taxpayers' expense. All of these banks were getting, all their C-suite executives were getting all these $1 million bonuses. Meanwhile, you know, the common American was just suffering throughout that whole time, losing their houses, not able to find a job, et cetera, right? So, again, when it comes to regulation, I guess it's a balance, right? So, speaking of the dollar, right? The dollar is still down quite a bit. Okay, still down. It looks like it's starting to climb a little higher, but over the last 5 days, it was down. Over the last year to date, down almost 2%. Over the last year, down 10%. Okay, that's the last year. Absolutely crazy. Okay, if we were to chart this against gold has just been increasing higher and higher and higher. It's just been running higher and higher and higher. I had a chart on Seeking Alpha comparison, but I figured there's no point, right? You just see the dollar continuing to decline. Meanwhile, gold was just climbing higher and higher. The gap is pretty ridiculous. If you guys want to check that out, I got to cancel this call. I don't know why they're calling me right now. All right. Okay. Let's see. Let's move on. So ASML, so we're at about 8:30. So I'm going to breeze through this last segment. All right. Through these last couple of segments. And then we'll open up the line if anyone's interested in joining and kind of, again, sharing their thoughts. Again, a lot of this news is fresh for me. I had not had a chance to really go through it and commit a lot of it to memory. So excuse me if I hit you with the ums and the ers. All right. All right. Chip giant ASML surges 7% as AI boom fuels record orders in upbeat 2026 guidance. Okay. If you guys don't know who ASML is, they are one of the most important companies in the world, based out of the Netherlands. And they're the only company that basically does lithography. All right. In China, they're creating their own ASML clone over there. But ASML is one of the most important companies because they create the technology which allows for the creation of semiconductor chips, etc. Right. So this is why they're so important. All right. So we wanted to see what they had to say, because whatever they say is kind of an indicator for it's an indicator for the AI thesis, right? For the AI bubble, right? Everyone's talking about the AI bubble. I don't subscribe to the AI bubble thesis at all. I'm sure a lot of people do, but I just don't. All right. Analysts expect memory chip maker to increase capacity to mitigate a shortage in the component, which could benefit ASML. All right. We already know that with Micron, right? We know that with Micron. We know that with SK Hynix, that the demand is absolutely insane for these two memory makers. All right, bookings, one of the most closely watched metrics from investors, came in at 13.2 billion euros or $15.8 billion in the fourth quarter, ahead of estimates. ASML also announced a 12 billion euro share buyback plan to be executed by December 31st, 2028. Okay, so whenever I am of the thought, and you guys correct me if I'm wrong, I've always held the thought that, you know, if a company is buying back their shares, that is bullish for the company, right? I have not heard really a case against that. People, you know, I've seen comments here and there saying, you know, like, oh, companies that buy their shares back, you know, is a losing bet, right? I don't know how. Why would a company want to buy their shares back, you know, unless they know that they're going to be, you know, increasing the value of their shares over time. So again, this is, I think, a good thing for ASML, but it's long term. All right, so ASML reported Wednesday orders that smashed past expectations, while 2026 sales guidance was also ahead of estimates as AI demand continues to support the Dutch chip giant's business. All right, the company said it expects net sales in the current quarter between 8.2 billion and 8.9 billion euros, and total sales for 2026 to come in between 34 billion euros and 39 billion euros. All right, that's total sales for 2026. Again, bullish, I think. ASML previously said it does not expect 2026 total net sales to go to be below 2025. The company's new forecast points to revenue growth between 4 and 19% compared to 2025, signaling an improvement in its prior commentary on 2026 when a rise in revenue was uncertain. If you guys remember, ASML, they had actually said that they were not sure last earnings about their 2026 earnings, and the stock just absolutely plummeted. It had like a 10% dip. Overall, I think the total downward pressure was about, I think, between 12 and 14%. So if anyone got in on there, congratulations. There's a pretty prominent YouTuber out there. His name is Joseph Carlson. He is really bullish on this stock. And I think I think now he's sitting at like about 60 or 70%, capital gains on his position. So, he's obviously very bullish, but he did put out a really good video that covers ASML as well. All right. So they also said that, see, I saw two different numbers. I saw 17,000, but I guess it's 1,700. All right. So they're going to be, doing some layoffs in their company. All right, 1,700. So they also talk about AI tailwinds. ASML, which makes tools required to manufacture the most advanced chips in the world, is experiencing several tailwinds. All right, tailwinds are good, driven by AI infrastructure boom that have pushed its shares up nearly 30% this year alone. Taiwan Semiconductor, TSMC, this month posted another record rise in profits in the fourth quarter, adding to the narrative that demand for AI chips and infrastructure will continue. So the show goes on for the AI thesis. All right. So again, the whole narrative behind the AI bubble and it bursting and everything else was more so, I think, around the hyperscalers, because they're really the ones driving that narrative. We have I'm not going to say the second word, but it's a circular financing, right? A circle something. But yes, it's basically all of these big hyperscalers loaning each other a bunch of money, buying each other's shares, and promising each other a bunch of stuff. And yeah, I mean, I could see how that would be a little worrisome for investors, because it's like anything OpenAI did a partnership with, which they did a partnership with everybody. Their stock rose. Their stock rose for almost nothing, for money that has not been paid, for projects that have not been even started, right? And right now, if you guys are paying attention, OpenAI is basically begging for money at this point. Okay, and this is kind of worrisome. You have Microsoft and NVIDIA that are actually going to be plowing money into OpenAI, right? It's almost like SoftBank, based in Korea, one of the biggest, banks out there. They do a lot of investment. They ended up selling their NVIDIA shares so they could plow that into OpenAI, right? It's like OpenAI is running out of cash and they need more cash. So again, the circular financing, the AI bubble, is it all hinging on OpenAI? That is interesting. That's left to be seen, right? But that is essentially what it is. That's the whole bear case against this AI, wave and for the AI bubble. So Meta shares jumped 10% on stronger than expected revenue forecast. Meta reported fourth quarter earnings on Wednesday that topped estimates, issued stronger than expected sales guidance. And we covered Meta yesterday, coming out with their new premium model for Instagram, WhatsApp, and Facebook, right? They're going to be utilizing, Manus AI, which they acquired for $2 billion last year. So they're integrating it into these tool sets and or to these platforms, Instagram, Facebook, WhatsApp. And, from a user perspective, you'll probably just have additional AI tools, right? You'll be able to probably use them for an assistant or something. I really don't know. I'm not going to go on Instagram and use whatever Instagram AIs is, right? I have no idea. I don't know what they could really use it for. There was a blurb that, it'll probably give you additional access to video remixing using AI and video software. I could see that, so it'll just be more AI slop out there. So, again, we'll see. Is this bullish for Meta? We'll see if they can actually get users onto their premium subscription. Meta said it expects first quarter sales to come in a range of 53.5 billion to 56.5 billion, ahead of analyst estimates of 51.41. All right. So again, really good for anyone holding Meta. Shout out to you guys. Meta report is fourth. We already covered this. We covered this. Let's see. Finance chief Susan Lee said that the forecast, get out of my way, was really underpinned by strong demand that we saw through the end of Q4 and continuing into the start of 2026. The company said fourth quarter sales rose 24% year over year. The company said its advertising business generated revenue of $58 billion for the period. Advertising made up nearly 97% of the company's overall revenue for the quarter. So like I mentioned in yesterday's stream, Meta's biggest moneymaker is advertising, Facebook ads, right? They spent a lot of money on that platform, Meta ads, right? Meta ads management, or whatever they call it now. But they spent a lot of money on that. And now they were trying to have that move into having AI ads, right? Where AI can assist the user with generating ads. It's how they make their money, right? Metaverse, total flop. It's pretty much a done deal at this point. It's not going anywhere. They spent too much money. All of last year, they went on this massive acquisition spree, acquiring the best talent and acquiring companies and doing partnerships with companies, all for AI. And they didn't really even have an AI, a plan for AI. So now, they can do that. They can absolutely do that because of this, right? Because of this right here, advertising. They make so much money off of advertising, so they can take these crazy risks and buy a bunch of companies. But anyways, let me get off that. All right, let's see. Meta said the CapEx spending is due to year-over-year growth driven by increased investment to support our Meta superintelligence lab efforts and core businesses. We've seen news in the past where Meta is doing deals, with someone like Google, for their TPUs. They've done deals with, NVIDIA to acquire their NVIDIA chips, etc. So, Meta is on the run for these, for this data center, right? They have been spending money on data center stuff. CEO Mark Zuckerberg said Meta will release its latest AI models over the coming months, and their AI model is open source, right? Where OpenAI, Google, and probably Amazon at this point, they all have their private models. I expect our first models will be good, but more importantly, we'll show the rapid trajectory that we're on, he told analysts on a call on Wednesday. And then I expect us to steadily push the frontier over the course of the year as we continue to release new models. So we'll see what Meta has in its pocket. Again, we had Apple basically just say, you know what, we're not going to do it. We're not going to do it. We're just going to outsource it to Google. We're going to just put, Siri and Gemini or we're going to have a white wrapper Gemini and just put Siri on top of it. So at least that's the way I see it. Apple's kind of just bowing out of this AI race again. I mean, I said this earlier, how much more productive can Apple get with their phone devices, their consumer wearables, their consumer electronics, and like how much more innovative can you get? How much more thing can you put into an Apple Watch or even a phone, right? Their laptops are really good, desktops really good, but outside of that, it's like, what else can they innovate on? AI, I get that Apple does not want to be the first one in the race. They would rather wait and kind of learn and then develop the best product for that. That's why Apple has such a huge fan base, because they have some of the best products. But again, it's like they're trailing Samsung. Samsung just keeps pumping out new innovative phones like every other year, better memory, better cameras, etc. And then Apple will like have half or a third of that innovation, but it's the best, right? So just my thoughts on that. I know we're talking about Meta, and I would not shut up about Apple. Okay, Tesla tops estimates for the quarter, but wraps up its first annual revenue drop on record. Tesla reported better than expected earnings and revenue for the fourth quarter, which is a big surprise because over the last couple of quarters, Elon Musk was saying, yeah, this will be a little bumpy, right? This is we may not see any positive growth for at least a couple of quarters. So this is a welcome surprise. I cannot hold Tesla personally. It's just too damn volatile. We have the Elon effect. If you guys were holding Tesla or TSLW or basically anything related to Tesla in 2025, you know how bumpy that ride was. All right, revenue fell for the third time in 3 quarters, and sales for the full year declined for the first time on record. Net income plunged 61% from a year ago in the quarter as operating expenses jumped 39%. Oof. Okay, let's see. Tesla is better than expected fourth quarter results. Let's see. Year dropped 3%. We kind of already covered this. Earnings per share 50 cents adjusted versus 45 cents, 24.9 billion versus 24.79 billion. So again, really not that much. I'm just going to come out and say it, man. Yeah, and I'm not surprised that they're mentioning BYD. If you guys are outside of the United States, like I've driven in a BYD, I've driven some of these actual like Chinese EVs out here in Thailand. I don't know what the big hype about Tesla is, aside from their FSD. Like these other EVs are cheaper. They have just the same amount of, we'll call them bells and whistles as a standard Tesla does. You're not paying a premium just for the name, right? Like a BMW, where you're paying a premium for the name, but also the engineering. I get it. But, like if you're like most people, you just want a nice cold AC, a nice hot, a heater for the wintertime, especially those living in the Northeast, and 4 wheels, you get to work. I mean, why would you pay a huge premium, right? These EVs out here are insane, absolutely insane. They have really good electronic systems. They come equipped with, some of the standard features that a Tesla would have. And also there's a lot of charging stations out here as well, right? A lot of charging stations. And it's just crazy to see that the biggest competitor, I think, to Tesla is not in the United States. It's actually in China. And we've covered that quite a bit in previous streams last year, that Tesla's biggest competitors are over there. Tesla lost a lot of market share in China, and they lost market share in Europe as well. So, and then of course you stack on the whole, Doge thing. And I mean, he lost a lot of face and a lot of loyalists during that time as well, during that period. But, it depends on how you look at Tesla. Some people think it's just a car company. I like to think that Tesla is just a robotics company that just happens to do cars. Okay. Because Tesla is doing a lot of amazing things, but it's just, you got to let that thesis play out. They're doing a lot of things with robotics. They're doing a lot of things with AI. They're doing a lot of things with automotive, right? So they are staying competitive, but it's just going to take some time, right? It's going to take some time. There's also the thought of like EVs in America versus EVs in China, right? EVs in China, that is the next evolution for that country. They have to move towards that. Whereas in the United States, we're pretty still reliant on traditional fuel and energy, right? Coal, oil, that kind of stuff. So it doesn't really make all that sense for the United States to just move towards EVs. And you also have to look at the bigger, broader picture, which is where's all that silver, all that metal coming from, right? It's all coming from China, right? The United States would have to pay a premium in order to get that in, right? These car companies that are building these EVs would have to basically enrich China in order to get the materials that they need to build these companies, right? Which would obviously weaken at a broader picture, geopolitics platform, I guess, or global stage. It would weaken the United States. So right now we're again in this arms race with China for AI, get them off the supply chain. So this is why all this matters, guys. Like, this is the bigger picture. At least I think so. Let me know in the chat what you guys think. You know, definitely want to hear your thoughts. I can't be the only one that thinks this. Anyways, moving on, we are at 8:45. So again, I want to be respectful of your guys' time. I may not have time to get through the rest of this stuff. Microsoft stock dropped 7% on slowing cloud growth, light margin guidance. Microsoft beat consensus on top and bottom lines as cloud growth moderated. The company had $37.5 billion in quarterly capital expenditures and finance leases above Wall Street's $34.3 billion. All right, there are now over 15 million paid seats for the Microsoft 365 Copilot artificial intelligence add-on to productivity software subscriptions. I have not used Copilot, all right, personally, and I do have a Microsoft 365, a O365, subscription. I have not used Copilot once. I don't know. Whenever it comes to Microsoft, they always want to throw in a bunch of ads and a bunch of garbage. So I have a very strong, even though I'm using Microsoft Windows, I have a really strong distaste towards Microsoft personally, just because I've used the platform pretty much my entire life. I was an IT professional, et cetera, et cetera. And I know the games that Microsoft plays, right? Microsoft, the S in Microsoft is a $, because if they can squeeze a couple dollars out of you, they absolutely will. But anyways, the operating margin guidance for the new quarter came in light. We're going to skip all of this, all right, guys, because again, I'm running tight on time and I want to get through the rest of this. Gold jumps over 3% to fresh highs as Asia markets trade mixed after the U.S. Fed holds rates, okay? Spot gold price hit a record above 5,500 per ounce on Thursday. So we are well on our way to 6,000 easily. Investors will be keeping an eye on Indonesia's Jakarta composite after the index provider MSCI had issued a statement warning of a potential downgrade of the country to the frontier market status, all right? So gold is continuing to pump, even on the news from the Federal Reserve that they're going to keep rates steady. All right, nothing is going to stop gold from continuing to rip higher. It is basically a hedge against fiat currency as well, and a hedge against the debasement trade. There's a lot of reasons to like gold. All right, there's a lot of reasons to like gold. Other metals are doing just as fine, right? You have silver that's also pumping pretty hard, but in silver's case, silver is more of an industrial metal, all right? It's not like gold, where gold is a store of value, all right? So there we go. Gold posts biggest one-day dollar gain on record. Deutsche Bank says gold could hit 6,000. I'm not going to cover that because it'll take us past. Let's see if there was something in here I wanted to cover real fast. While a softer USD benefits exporters, it costs foreign buyers less to purchase dollars. It can increase inflationary pressures, says FP Markets chief analyst Aaron Hill said in a note. The issue right now is Trump's unpredictability, and that is absolutely true. From threatening tariffs to designs on Greenland, his actions continue to rattle the markets, prompting investors to reduce exposure to U.S. assets. This adds fuel to USD downside and could ultimately bolster inflation. And that is absolutely true, because dollars out here, at least in my neck of the woods, I am losing value, right? When I do that transfer from USD to Thai baht, I am actually losing money on that transfer, which actually really, really sucks. The Thai baht is actually stronger than the US dollar right now. On that note, again, when we talk about unpredictability, just for those of you who may not be following what's happening in the broader world, especially in the Middle East, we covered this briefly, but there is a aircraft carrier strike group over there, right? Just out there for fun in the sun. Definitely not there to strike Iran. So again, keep your ears open. There is a potential for something to happen this weekend, because of everything that's going on over there. Okay. So it's good that it's not happening during the market open, because then that would obviously rattle the markets. Again, this is all by design. In the last couple of instances of Trump doing things or the US military taking action, it has usually happened on a weekend. And we know that because the last time this, incursion into a country over there had happened. It happened on a weekend. All right. So something just to be aware of. All right. Especially if you're investing in commodities, whenever there's uncertainty out there, gold seems to do very, very well. Okay. Energy fuels lead nuclear names as higher, or leads nuclear names higher as the Department of Energy launches steps to boost nuke fuel supply chain. All right. Covered this very briefly in another stream. Again, I keep mentioning that, but I got to stop. But anyways, uranium becoming very important. Okay. Uranium, you hear a lot in the news that the Trump administration is pushing for nuclear plants. Okay. Where are you going to get all that uranium from? Right. So this is what's leading us down a level. And now we're looking at miners, right? Uranium miners. Okay. So Energy Fuels is one of those names. It led a rally in nuclear technology stocks Wednesday, plus 14.2% to its highest in nearly 15 years as the Department of Energy unveiled an initiative to build out the U.S. nuclear supply chain. Okay. So if you're a big believer, again, in this space, in the commodity space, you could probably be looking at a nuclear miners ETF or something of the sort. All right. You have some other names in here. All right. You have Oklo. Again, I don't know much about Oklo other than they haven't done anything yet. Their stock price has just been going crazy. You have Denison Mines. You have Next Gen Energy, Centrus Energy, New Scale Power, Cameco Energy, Uranium Energy, and Lightbridge, and UR Energy, URG. So here are a list of tickers that you guys can check out if you're interested in adding a little uranium exposure, a little yellow cake to your portfolio. Paladin AI soars. We're going to skip that. SK Hynix secures 70% of NVIDIA's HBM orders for the Vera Rubin. Vera Rubin is NVIDIA's latest chip. Okay. So if you're still on the fence, like I am, I'm still waiting for a pullback, for a potential drop, maybe a little buy in a starter position in either SK Hynix or Micron. This could be, really good news for at least SK Hynix. All right. So if you're interested in looking at SK Hynix, just know that this is out here. The South Korean memory maker SK Hynix has secured about 70% of NVIDIA's high bandwidth memory orders for the Vera Rubin. And the Vera Rubin, again, is NVIDIA's newest chip that will be going on sale, and there will be high demand. It is a very extremely powerful chip that they came out with. He released news about this, I believe, at their last conference or during one of the keynotes for I want to say CES. So really, really interesting stuff here. Obviously, it blows the Blackwell out of the water, right? And so I wouldn't be surprised if China starts building more shell companies either in the UAE, in the United Arab Emirates, or probably in the United States, trying to acquire these Vera Rubins, right? But they don't want people to have Vera Rubins, right? They don't want their companies to be rich. They want to force, basically Chinese companies to own Chinese semiconductors, right? Again, we talked about ByteDance as one of them. All right, the 70% allocation to SK Hynix for HBM4 is more than the earlier market estimates of 50%, the report said, citing sources familiar with the situation. SK Hynix is expected to account for 54% of the global HBM4 market in 2026, followed by Samsung and then Micron at 18%. All right, Samsung at 28%. NVIDIA and AMD have also completed quality testing with Samsung's HBM4 products. So there we go. That's what's happening in the semiconductor land. Very, very interesting. Again, bullish for SK Hynix. Absolutely bullish. We're going to skip this. This is just talking about more, AI thesis stuff. It's not going anywhere, right? AI demand is not going anywhere. SK Hynix is one of the benefactors profiting from this. Just real quick, we'll cover, and then we're finished with at least this segment, which is a very long segment. So I appreciate you guys hanging in there with me. All right. NVIDIA urges U.S. Congress to reauthorize the National Quantum Initiative. All right. This is a big one, especially if you're interested in quantum. I'm just going to put this out there. This has been Defiance's probably best ETF, right? One of their best ETFs has been the quantum ETF, right? You get exposure to quantum. You don't have to pick the individual names. You could look at something like an IonQ or a D-Wave. But man, some of these were trading like straight up meme stocks last year. They're not even making any money. They have no product whatsoever, and their stock price was just going crazy. But if you're interested in the quantum space, defined quantum is something you could look at. And as a little hack, as a value add, if you do want to invest in individual companies, right, what you can do is look at the holdings of quantum, right, of qtum, and then take a look and see. That's basically your due diligence list, right? That's where you would start. You could look at quantum, Micron. Look, they got Micron, they got Lam Research. Let's see, ASM International. So I guess I don't even know who that is. KLA Corp. There's ASML right there, right? So, the fund manager kind of takes away all the guesswork, and it gives you a list that you could do your due diligence on. But anyways, going back to this, NVIDIA urges U.S. Congress to reauthorize the National Quantum Initiative. Let's see, there was a really important part in here. Quantum technology is critical to national security and new jobs and innovation, which is why I have long fought to invest in the R&D workforce and supply chains required to maintain American leadership in this critical technology, says U.S. Senator Chuck Schumer. This legislation will provide the necessary sustained federal investment to ensure that the quantum industry is made in America and not made in China. Again, the same rhetoric we've been hearing throughout this entire time it's a race, guys. It's an arms race between the world's two biggest economies. Both are vying for power in the AI space, right? This is very reminiscent of the Cold War between Russia and the United States, where it was who can build the best rockets and get a man on the moon first, right? So this is exactly what this is. So the National Quantum Initiative Reauthorization Act would reauthorize quantum programs to advance innovative quantum research, protect our national security, and advance President Trump's goal of American quantum supremacy, added U.S. Senator Marsha Blackburn. All right. The bill, if passed, would extend the National Quantum Initiative by 5 years to December 2034. It also reauthorizes quantum research, education, development initiatives across the National Institute of Science and Technology and the National Science Foundation and NASA. All right. NVIDIA has been working on quantum computing architecture, including NVQLink, which provides the interconnect for quantum computers and GPUs, and qdte, an open source programming model that allows developers, all right, to program QPUs, GPUs, and CPUs in a single system. So again, NVIDIA just leading the way, leading the charge. They hold a lot of weight. So, it won't be surprising if something like this gets passed. All right. So we covered a lot, guys. All right. There was a lot of me just talking and blabbing on. I'm going to go and look at some of these comments. All right. Let's see. I got to scroll way back up. So again, I appreciate you guys. Let me get this invite a guest link for you guys. If anyone wants to come on and we could chat it up. We could talk about anything that we just spoke about. All right. So there is the link. I posted it in the YouTube chat. So if you're on X, I apologize if you can't see it. Let's see. So we have welcome back, G bro. No, I don't sleep. No, I wish I did. I really do need to sleep, man. Sometimes I'll be in bed, ready to go to bed, right? To wake up early for the stream. And then what will happen next is I will start browsing YouTube, right? Browsing news, checking my portfolio. And next thing I know, it's like 1 a.m. And I'm like, well, crap. I just wasted a whole bunch of time and now I got to wake up super tired. I think the biggest news today was, at least for the high yield space, is going to be this. I think this is going to be a really popular product. Let's see. So going back, all right, NEOS pay weekly, never, not with 50% leverage. They need to stick with monthly options for that to work. And we have from El Patron Alfredo. I don't think I've seen you post before, so welcome. NEOS has said regarding weekly pay, more or less, is not happening because they don't see an actual need for it, and it is more of a want. Would rather charge a lower expense fee, plus advisors don't like it. I actually think that's really cool. That is really cool. Thanks for sharing that, because that kind of makes sense. Everyone likes the dopamine hit from the weekly pay stuff. We're getting paid every single day, right? But I mean, a monthly is not bad either. I remember before all this high yield stuff, like getting monthly was like it was the best, right? Because you usually had to wait 3 months. Like, could you imagine the old retirees? Like they'd have to wait quarterly to get their dividend. Now we get it, sometimes twice a week, especially with Defiance, right? Defiance has an ETF that pays you twice a week. I mean, the dopamine just does not stop. And I really sometimes I sit back and think like these fund managers know exactly the buttons to press, right? The responsible ones will probably, do something like this where there's like, no, let's just keep it at monthly. We don't need weekly. There's no need for that, right? It's a want versus an actual need. So I thought that's a good point. So from Padre, i.e. Tungsten Tiger, we had, did you catch a video I posted on Besant and commodities the other day? It's a clip from before Trump was re-elected. I think I saw that actual clip before you had posted it. I think you probably posted it twice, but I believe I did see that. I can't remember it right now, but I know I did see it. Again, like I watch so much freaking finance stuff, like I can't commit everything to memory. I don't know how some other YouTubers do it or professional commentators do it. I cannot commit all this stuff to memory. I need to ask Micron or something. I need to put an order in with Micron. Let's see, from Skeptic, R King from Defiance actually getting some buzz. Check the holdings when you can. Let's check right now. Why not? R King while we're waiting. R King ETF. Let's see what we got. That can't be it, right? Ring. Did I put Ring or R King? And you said that's from Defiance. Let's see, Defiance. Come on, Eugen. There we go. All right, we'll just go to Defiance and check it out. I mean, what is it? Is it thematic? Oh, it's ARC. Yeah, okay. Let's see. Retail-driven market leaders. The ETF focused on retail. Okay. The Defiance Retail Kings ETF is an actively managed ETF designed to provide exposure to companies demonstrating strong retail investor participation, digital engagement, and price momentum. Man, is this just another SPMO? Like, as retail investors increasingly influence price discovery and market leadership, our King seeks to identify stocks where elevated retail conviction aligns with sustained momentum. This just sounds just like SPMO, but like cooler. Proprietary analysis of retail investor engagement. So they're browsing Reddit is essentially what they're doing. They're browsing Reddit or x.com, right? Digital activity. Oh, okay. So there it is. Participation trends and sentiment to identify elevated bullish conviction. So they're using Google Trends to see if this name keeps coming up. All right, I get it. I mean, I don't know. I wouldn't touch this. Let's see. So they have Micron, Nebius. These names have all definitely been in I want to say some of the meme space, definitely. Yeah, there is a strong Iren community, definitely a strong Nebius community. Navitas, yep. Let's see, Space and Defense, AST, Rocket Lab, Ondas. Hey, what's up? I don't know who this is. Financial platforms, we have Robinhood. You know, this could be a decent ETF. I'm gonna change my mind about this right here on this stream. I think this could be a decent ETF. Yeah, I mean, well, there you guys go. If you're interested in investing in high momentum plays, right? But you don't know where to start. Well, then you can look at R King. So interesting ETF. Appreciate that, Skeptic. You always be on the ball with these. All right, let's see what else we got. Let's see. Let's see. This is from Victor Singh. News about the USA plans to strike Iran this weekend. Someone bet 25 million on it happening. Wonder how the markets are going to react. Crypto mostly. Whenever it comes to these geopolitics stuff, these geopolitical events, let's call them that. Again, they usually happen on a weekend. And the reason why is because if it happens during the week, the market can't digest it fast enough. So usually it means a sell-off. It creates uncertainty, right? During the, 10-day war, 12-day war between Israel and Iran, I mean, that was a pretty volatile time. That was pretty crazy, right? And then what was the U.S. going to do, et cetera. So the market just didn't know how to respond. So usually that means uncertainty and sell-off, right? But as we have seen with the last couple of events, anytime the United States does any type of military action, it's usually on a weekend because it allows the market, you and I, to kind of digest it. It allows, all those pundits to come out on CNBC and say, oh, this is not a big deal. This isn't going to roil the markets. It allows Secretary of Treasury Scott Bessent to go on TV and say, this is not a big deal. It allows Trump to get on TV and do his press conference and kind of calm the markets down. So I don't see that it's going to do anything, honestly. We'll see, but I still have some amigos in that area, and they're telling me that it's getting pretty spicy out there. So let's see what else we got. Victor Sank says my most profitable cover call ETF is actually tsly. We have from Padre, lots of Chinese automakers in Canada now, already been in Mexico. They have the US surrounded. Absolutely. And man, like, again, I would challenge anyone, if you ever travel outside the United States, just hop into one of these cars and see what's inside. It is crazy how nice they are. And they have all of the same bells and whistles that a Tesla would at probably a far or a cheaper price, right? Like, I actually own an EV. I'm not going to mention the EV on this stream, but I do own an EV, and I am really pleasantly surprised by how well this thing is. It has, several different modes. You have sport, comfort, eco mode. There's battery charging stations all over the country, right? It's nice. I mean, it's quiet as hell. Like, I don't even know sometimes if the car is coming here or not. It is a really nice car. So again, you get the same kind of quality that a Tesla would provide, but from a Chinese EV, right? And if I ever need to, I'll just pillage the silver out of the battery and then resell that. Let's see. Used to own BYD, sold due to China's bullying 3 years ago. Oh my goodness. I wonder what BYD is at this moment. Let's see, from R14 Real, I added some Sprott ETFs and Curve Gold and Silver to my list. Excellent, man. That is excellent to hear. A lot of hoopla has been going around for Curve, especially for their two ETFs, the Curve and the Silver one. And of course, Sprott is a personal favorite of mine. So definitely like Sprott. I actually ended up buying some Sprott common shares, right? I didn't buy enough. But I might increase that position a bit. I'm still undecided right now. But kind of and this is to Padre's point to me, was that if you like the mining ETFs, why not just own the actual company that produces that, right? Kind of like if you were to if you like BlackRock, right? You have a lot of money tied up in their iShare product. Why not just own BlackRock? BLK, right, is the ticker. So that's kind of the way I'm looking at it. Just might as well own the basket. And yeah, so I do own a little bit of actual Sprott. Yellow Cake wasn't on the list. Ticker YLLXF. All right, so I'm on Robinhood, as most of you know, so I don't get these really crazy OTC tickers. All right, but if anyone is on a professional, like a real brokerage account, Fidelity, whatever, Thinkorswim or Schwab, etc. Well, there you go. You guys can check out that ticker. All right, so we have from Sergio. Hello, Eugen Vasquez. I didn't know you had your own YouTube channel. We both participate in the morning channel with John in the YouTube channel, Beginning Trader. You must be talking about Rod, R-O-D. I remember you from there. I'm not sure about John. But hey, welcome to the channel either way. Let's see. So he also says, I own it and love it. Individual quantum computing stocks. Awesome. That's awesome to hear. Let's see what else we have. From Sergio, IonQ, Qubits, and Rigetti. Or some people are calling this Regretti because of the massive drop that Rigetti has had. Or Rigetti, whatever you want to call it. Even HON. I don't even know HON. I've never seen that ticker. Let's take a look. Why not? All right, let's open up this old Robinhood app and get the dust off. Hold up, and we're gonna pull up HON. Oh, Honeywell. Well, I'll be damned. Okay. Yeah, let's see what Rigetti is doing. What was it? RGT, right? RGTI. Yeah, I know this has a pretty big community as well. See, everything is like community based. Oof. Oof. Yeah, you see, this does not inspire confidence. But again, I mean, this is following the kind of the same trend as most risk on bets. Even Palantir has not been doing well at all either, right? Ever since October. So this makes sense, right? This makes sense. We can look at IonQ. Why not? Let's take a look at IonQ. IonQ. Let's see, 1 year. Yeah, kind of the same trend as well. So If it pops, we'll see. We'll see if it pops up. MST is the flagship product for Defiance. MST. You know, again, it's funny that MST was not delisted or on the list for delisting from Defiance. They listed everything else except for MST. And again, I really think it comes down to AUM because MST still has a pretty decent AUM of $22 million, right? That's $22 million of inflows that they are managing and making a nice expense ratio, 1.42%. But you know, again, I think there is just a cult around MSTR, and I'm more or less part of that cult. But we'll see. We'll see. Maybe one day there's a world where MST, you know, climbs higher because MSTR, and definitely with that 200% leverage, you know, those spikes up if they ever happen, or when they happen, I should say, will make MST look like a genius play. Let's see. Sergio says Defiance got hit by the SEC with some of their 3x funds. That was pretty much everybody. That was Defiance. That was YieldMax. Just everybody, right? Everybody got hit. Whoever's trying to offer 3x funds. We covered Roundhill. Those those freaking guys coming out with 4x QQQ and 4x SPY, which is ridiculous, right? I mean, you have TQQQ, right, which is a triple leverage already. I think it's when you start stacking on income, you know, you cover calls and all these other strategies, right? That's when the SEC starts looking at these and getting a little worried, because we already have, you know, the TQQQ, right? So we already have that. So maybe 4x is not that bad. Maybe 4x is not a big deal. Let's see what else we got. Oh man, here we go. I'm still hanging on my MST and adding, says Randy Big T. Randy A Big T. Hey man, I tip my hat to you. I'm gonna just say it. I don't want to admit this. I don't even want to say this on stream, but I'm gonna say it. I did buy a little bit of MSTW. I'm not gonna say how much, right? I did buy a little MSTW. Maybe I was watching too much hopium and copium videos. But I'm just like, man, I'm super bullish on MSTR. Like, I still like MSTR. I don't care. You can't shake me out. You're not going to change my mind. I'm still bullish on MSTR. And I'm like, at these levels, if I didn't own MSTW way up in the, you know, I think my cost average was like 36 or something. If I did not have MSTW, I would definitely be adding MSTW now, or at least MSTR common shares, right? Common stock. I would have definitely been adding it. But again, I have really high exposure already to IBIT, Bitcoin spot price, and MSTW, right? I already have a large enough position, but man, it is so hard not to want to buy MST, right? Or MSTR, I should say. So Randy says, yes, I got my MSTR at $39 a share and killing it. Golly, damn. Let's see. And we got from Andre, your best bet is get MSII from Rec Shares. Yeah, a lot of people have been saying that, you know, MSII, Rec Shares, you know, their income products, you know, they have a ton of them now, that those will fare better, you know, compared to the Roundhill stuff. Probably yes, definitely probably yes. But you don't forget that MSII and those from RecShare, they have 150% leverage and they reset daily, right? So if you're you know thinking about the resets and path decay and all that stuff that goes in there, volatility decay, if you're thinking about that, you know, over the long term, which one could be better? My money is just on the Roundhill stuff. It has very soft leverage, 120%. It resets weekly versus daily. I know people will say, well, let's bring up the price chart. So let's compare. Guys, everything counts when you buy it. All right. Not when it first, you know, the inception date. It starts when you buy it. Okay. Because if you're to buy MSI or anything, NVII, doesn't matter if it's NVDW, whatever, whenever you buy it, and if there's a dramatic drop, that leverage is going to add on to the pain. Okay, so it's whenever you buy it. So, you know, these comparison videos and everything else, I kind of just stop listening to them personally. I kind of just look at them with a grain of salt, in my opinion. All right, I'm not saying that they're bad content creators or bad content. I'm just saying I think what counts more is when you buy them. Okay. So just my thoughts on that. All right. So I thought we were going to have the working investor come on because I thought he was going to come on. He was on earlier. He probably had to go off to do personal things while I'm yapping over here. But I think that'll do it for me. I'll give it one last shot here. If anyone wants to come on as a guest, we can absolutely chop it up. So let's see if that sends. All right, there's the link one last time. If nothing is heard, nothing is said, then 9:15 is probably when I'm going to close it out. So I find only XPay is safe. I hold XPay myself. I've been pretty happy with XPay. I have no desire to get out of XPay. It's a very vanilla cover call ETF. Nothing exciting, no new strategies, right? No sexy puts or any of that stuff. It's just a simple vanilla PMCC, as they call it, I guess, the poor man's cover call. So I'm fine with XPay, and I held XPay pretty much all of 2025 when I first started investing in high yield. It's done exactly what it said it would do, right? It's distributed 20%. The share price has actually been very close to neutral for me. Very close to neutral, even though I've been adding on the way up. It's been very close to neutral for me. Not quite a gain, not quite a loss. All right. And it's been, again, distributing that 20% like they said. So I've been pretty happy with XPay. And I know, it's like, oh, you're getting paid your own money back and blah, blah, blah. Like, okay, I get that as well. But again, the answer is, if you look at rock and you understand what rock distributions are, and you understand that, time periods and how long you plan to hold it, then it starts to change your mind about it, right? It starts to change if it makes sense for your situation, right? And of course, I know we have some people in the channel who are like, oh, well, you could do your own cover calls. Yes, I get that too. I understand that as well. Like I could do my own cover calls. I get it. But, for me personally, XPay at a 20% distribution, not guaranteed, of course. I am fairly happy with that product. Roundhill has been pretty good for me. All right. Well, I think that'll do it for me, guys. I've been yapping on and droning on for pretty much an hour and about 15 minutes. I don't really have a topic today to discuss, to rant and vent on. I could probably rant and vent on about a lot of things, but I think I already did that throughout this stream. So with that being said, guys, as always, I appreciate you guys joining me for this coffee hour. All right, going over the market news, watching a couple clips. I hope this stuff was valuable for you. I hope this stuff actually helps you informing your own opinions or your own thesis for your own stocks and your own portfolio. All right. As always, again, I appreciate you guys joining. With that being said, I'm going to get going. All right. I got stuff to do. So you guys have a great evening, a great rest of your day, wherever you are in the world. And with that, I will see you in the next episode. Take care.